Okay, so if you're an Etsy seller, you know what it's like. You pour your heart and soul into your craft, but then January rolls around, and that creative joy can turn into some serious dread. In this explainer, we're going to dive into the source material from Liam Vance's Etsy Seller Tax Mastery to demystify your taxes and honestly turn that stress into savings.
It all starts with this, doesn't it? The moment that 1099K form shows up. I'm talking about the one document that causes the most confusion and anxiety for millions of creators. You get it, you see this big number, and your stomach just drops, right? You're not quite sure what it all means, but you know the IRS has a copy too.
But what if I told you there's another number? A number that should probably scare you a whole lot more. And it's this one, $11,000.
Yeah. According to our source, a huge 71% of sellers make a critical mistake that costs them, get this, on average anywhere from $1,200 to a whopping $11,000 in overpaid taxes. I mean, this isn't a small oops. It's a massive, costly misunderstanding. So let's just get right into it. What on earth is this $11,000 mistake? And more importantly, how do we make sure you never ever make it? And look, the stakes are getting higher. Like the author Liam Vance says in the book, the IRS is paying a lot more attention to online income now. A simple error isn't so simple anymore. The whole point here is to build what he calls a bulletproof shield around your business. I love that. Okay, so to dodge that huge mistake, we have to go right to the source of all the confusion. And it all comes down to really, truly understanding this one single form, the 1099K.
Okay, this right here is the absolute key. It's the one thing you have to get. The number on that form is your gross sales, the total unadjusted amount of money that flowed through Etsy. It is absolutely not your profit. And treating that number like it's your actual profit, that is the $11,000 mistake.
And you can see it right here. This is the disconnect that costs people so much money. On one side, you've got this big, scary number that the IRS gets a copy of. But on the other, you've got what you actually put in your pocket. So your job as the business owner is to legally and accurately explain the huge gap between those two numbers. So what pumps up that gross sales number so much? Well, a whole bunch of stuff that isn't your money. Yeah, it's got the product price, sure, but it also includes all the shipping fees your buyers paid and even the sales tax Etsy collected, which, by the way, goes straight to the government, not you. And here's the kicker. It doesn't subtract any of the refunds you gave out or a single penny of the fees Etsy to. So, okay, how do you actually fix this mess? Well, the book lays out this super simple, actionable process. It's called the 3-step reconciliation trick. It's awesome. Step 1, you start with that big, scary number from the 1099K. Step 2, you subtract the adjustments. We're talking refunds, sales tax, all that stuff that wasn't yours to begin with. And boom. Step 3, you land on your true gross receipts. That number, not the 1099K one, is your real starting line for your income.
All right, so correcting your income, that's just half the battle. Now we get to go on offense. Let's talk about the fun part, actively slashing that tax bill by finding every single deduction you're entitled to. And get this, according to the source material, there are more than 37 legitimate and often totally overlooked tax breaks just waiting for Etsy sellers. That is a huge opportunity for savings.
Now, while there are a ton of them, the book points out 3 major areas where you're going to find the biggest wins. First up, your supplies. Obvious, right? But are you tracking every bit of yarn, every drop of paint, every single bead? Second, shipping. This isn't just postage. We're talking boxes, tape, labels, even those little thank you cards you throw in there. It all adds up. And third, and this is a big one, all those Etsy fees, the listing fees, transaction fees, the ad fees. Remember, those aren't your profit. They are business expenses, and you can claim every one. Okay, let's talk about a big one, your workspace. So for the home office deduction, you've basically got 2 paths to choose from. You've got the simplified method. It's super easy, very safe, low audit risk, simple math. But if you're the kind of person who keeps meticulous records, the actual expense method could be a gold mine. It lets you write off a percentage of your actual bills, like rent and utilities. It takes more work, but the deduction can be way bigger. Okay, so we've found all this money. Now we need to protect it. This is all about building what the book calls your audit armor, so you can just have total peace of mind. And the heart of that audit armor is something really simple, but super powerful: the audit binder. Look, it's not some crazy, complicated thing. It's just a folder or a binder where you keep all your documents organized: your receipts, your bank statements, your Etsy CSVs. Having this ready to go just in case turns a potential nightmare audit into just paperwork. It makes you untouchable. But you know what's better than winning an audit? Never having one in the first place. So here's how to fly under the IRS radar. You really want to avoid these common red flags. First, mismatched 1099K income. That's like waving a giant red flag. We already covered how to fix that. Unusually high deductions compared to your income. That can look suspicious. Claiming a loss year after year after year, the IRS starts to think it's a hobby, not a real business. And please, don't just round all your numbers or claim 100% business use of your family car. It just screams, "I'm guessing."
So, when you put all these pieces together, understanding your income, maximizing your deductions, protecting your business, something really powerful starts to happen.
And here's the biggest takeaway from all of this. This isn't just about compliance or, following the rules. It's a complete mindset shift. It's about going from being a creator who just has to deal with taxes to being a CEO who strategically manages their business's finances. It's about taking control. So what's your CEO action plan? It boils down to 3 simple, powerful habits. First, reconcile. Always, always, always reconcile that 1099K to find your real income. Second, deduct. You gotta track and claim every single legitimate expense. Don't leave money on the table. And third, prepare. Build that audit binder now, not when you're panicked, for total peace of mind later. That's it. That's the whole game right there. That's tax mastery. So I'm gonna leave you with the same question the book leaves you with. After everything we've talked about, what's the answer for you? Because really, understanding your numbers, that's the first, most powerful step you can take to truly owning that CEO title.